Hello friends, welcome to the BSP solution. My name is Sandeep Singh. So in this video, we are going to see that once we change the ownership percentage under the manage ownership within the application, uh, what number we are getting into the application. So for that purpose, I have created a scenario in Excel. So first we will look into the Excel and then we will see this same number in the application itself. So this is my scenario where I do have the two entity, that is H limited and S limited. H limited is the parent entity, S limited is the subsidiary, and the H limited has taken the ownership by 80%. So this is the trial balance for both the entity, and in the here you can see the consolidated number. So since the acquisition took place by 80%, so we are merging the assets of the parent with the assets of the subsidiary. So it is all done that the asset will be merged with the assets of the subsidiary. Investment gets eliminated. Goodwill number calculated, that is 6,000. So the investment made by the parent into subsidiary is 70,000, and the net asset of the S limited is that, and that is common stock excluding of the retained earning current number, so 80,000. So if I calculate 80% of 80,000, this amount 64,000, so the 6,000 number is coming for goodwill. Similarly, you can see that the intercompany receivable amounts, because intercompany transaction that took place between the parent and the subsidiary gets eliminated at the consolidated level. Similarly, you can see for liability, the liability of the common stock of the parent entity, the retained earning current number is 98,000. So the 62,000 is of parent entity. And if I am going to calculate the 80% of, see, 80% of 45,000, this amount is 36,000. So this is my retained earning number, 62,000 plus 36,000, 98,000. The minority interest number is 25,000. That is the net assets of the S limited. This time it is inclusive of the retained earning current number. So if I calculate the 80% of 1,25,000, the minority number is coming to 25,000. For liabilities, it is simply merging the liability number with of parent with the subsidiary. Here the intercompany payables is gets eliminated. Both the intercompany receivable and intercompany payable eliminated at the consolidated level. So for that purpose, I have inputted those numbers, these trial numbers through the smart view. So I have inputted those number. Now I will show you that what percentage I have assigned to the for the ownership percentages. So you see that the my POV is for the month of January. This is my consolidated entity, that is ABC Limited. So you can see that under this we do have two entity, and for S I have assigned the ownership percentage 80. So the consolidation method will be subsidiary. So this is the ownership structure for the month of Jan. So let's look into the what number we are getting uh, into the application. So you see that the consolidated number in the application is 3,82,000. As per our calculation, this is 3,82,000 for assets, and for liability, this is for total liability and equity, this is 3,82,000. You can see the number of goodwill. The number of goodwill system is calculating 6,000, which is correct. Similarly, the minority interest number is 25,000. So it is calculating properly the number. Now in the month of Feb, what I did is that Ash Limited has taken the ownership back by 20%. So this means that this time the ownership is 60%. Prior it was 80%. So I have changed the ownership structure under the FCCS. So if I go into the month of Feb, I can show you that what changes I did into the month of Feb. So in the month of Feb, you can see that I have assigned the ownership percentage for S Limited is 60%, but the consolidation method remains the same, subsidiary method of consolidation. So let's check into the Excel that what number we should get from the functional point of view. So the method of consolidation remains same. So the procedure will remain same. The asset will merge uh, with the assets of the parent company, 100% merge of assets of subsidiary with the assets of the parent. So this is all common. Now the goodwill number here, you can see that the goodwill number is 11,000. So how this number is coming? Previously in the month of Jan, we have seen that goodwill number is 6,000. Now the investment amount earlier it was 70,000. Now it gets reduced because when the parent has released the ownership, they have received 20,000 from the subsidiary. So 20,000 investment into subsidiary amount I have put into the negative. Uh, and similarly, net assets of S Limited, because this time it is 1,25,000, because it will consider the retained earning till till the date of acquisition or release of acquisition. So this time this amount becomes 1,25,000. If I calculate the 20% of 25,000, this amount comes to 25,000. So the goodwill number is calculating 5,000. Now if I have added the goodwill for both the months, so the goodwill number should be 11,000. So the goodwill number is 11,000. Similarly, for the retained earning calculation, it is prior retained earning is 36,000. Now we have taken the ownership. We do have ownership of 60% only. So the 60% of the current retained earning, that is 12,000. And so the total retained earning amount is retained earning of the parent company plus the retained earning of the subsidiary. So this amount comes to 1,40,000. And the minority interest number we have calculated by the 40% net assets uh, of the subsidiary. So so this is the number that we have calculated. You can see the intercompany receivable and payable amount gets eliminated. So because the method of consolidation remains same, so the intercompany receivable payable gets eliminated. So I have shown to you that I have assigned the ownership percentage by 60% within the application. Now let's I have inputted certain number that I have reduced my investment made by the parent into the subsidiary by 20,000, and this is the transactional number, the revenue generated by the subsidiary in the month of Feb, and cash. So this was the data that I have inputted for the month of Feb. Now let's look into the balance sheet, what number we are getting. So you see that 4,57,000 is for total assets. Similarly, the for total liabilities and equity is 4,57,000. See, we have also calculated the 4,57,000 for total assets, and for total liability and equity is. Now let's quickly check into the goodwill number, what goodwill number we are getting into the application. So 11,000 is the correct goodwill amount. And now let's check into the minority interest number. This is 58,000 what we have calculated. This is 58,000. and the retained earning number is 1,40,000 what we have calculated. Rest rest all the accounts, it is simply merging, because you can see that the cash and cash equivalent is 70,000 plus 25,000 95,000. So for assets and for remaining account, that is assets and liability, it is 100% merging both them together. So the only changes that we are required to do into the application is that we have changed the ownership percentage from 80 to 60%, and the system does all the calculation itself. So that's it from my side. In case of any query, please feel free to visit to our website, that is bispsolutions.com. Thank you very much for watching this video. Thank you.